Welcome back to Tech Unpacked, the podcast that digs into the real stories behind the headlines. I'm Jenny, and with me, as always, is the human encyclopedia of all things tech, Mark.
Hey Jenny! And hello everyone. I've been just buzzing with excitement for this episode. We are talking about NVIDIA today, and honestly, the sheer scale of their dominance in the GPU world. It's quite something, isn't it?
It really is. We've all seen the flashy headlines, but our research for today's episode really peeled back the layers on the secret to NVIDIA's success. And Mark, it's not just about making pretty pictures on your screen anymore, is it?
Oh man, not even close. While gamers definitely know them, NVIDIA has moved way past just graphics cards. They are dominating nearly 94% of the discrete GPU market as of Q2 2025. I mean, AMD's at 6%, and Intel's barely registering. That isn't just winning, that's a near monopoly. And we saw a 27% surge in Q2 2025 shipments. That's not just a good quarter, it's a significant market event.
94%? Wow. My first thought is, how is that even possible? What's the secret sauce? Because that kind of number suggests something deeper than just a good product. Do you think it's sustainable? Or does that kind of market share actually introduce risks?
Well, that's the multi-million-dollar question, isn't it? Or, in NVIDIA's case, probably $1 trillion question, since they're one of the most valuable companies out there. So, here's the thing, Jenny. A big piece of that secret sauce isn't actually hardware. It's software. It's called CUDA.
Ah, yes, CUDA. I've heard that term thrown around a bit. For the uninitiated, myself included until recently, what exactly is CUDA?
Right, so basically, CUDA is NVIDIA's proprietary parallel computing platform and programming model. Think of it as the operating system for their GPUs, allowing them to do a lot more than just render graphics. It lets developers use the GPU to accelerate all sorts of compute-intensive tasks, especially AI and scientific simulations. And here's the kicker. NVIDIA spends about $2 billion a year keeping CUDA free for developers to use. It's a massive investment in an ecosystem.
$2 billion? That's a significant investment. So I guess that's how they've locked in over 2.5 million developers, right? It sounds like you're not just buying a GPU. You're buying into a whole ecosystem with powerful tools that are hard to leave.
Exactly. It's their competitive moat. This ecosystem is so sticky that 87% of AI startups exclusively use CUDA. And in data centers, it powers 95% of AI accelerators. It creates what some call a CUDA tax, because NVIDIA can charge 30 to 40% price premiums over competitors' chips for similar raw hardware, because those competitors don't have CUDA. It's difficult to overstate how important this is to their market position.
It's building a universe around your product, essentially. But speaking of surprising market dynamics, our research mentioned this incredible Q2 2025 surge in shipments. That wasn't just organic demand, was it? Something about tariffs?
Oh, that's another fascinating and, frankly, a bit wild part of the story. John Petty, a prominent industry analyst, called it unnatural demand. What happened was that people were anticipating new U.S. tariffs on semiconductors. So, they started panic buying to get ahead of potential price hikes. It's like when people stocked up on, say, toilet paper in 2020, but for GPS.
Panic buying GPUs? That's a new one. So NVIDIA played this perfectly by timing their RTX 50 series launch amidst this chaos?
They played it like a master symphony conductor, Jenny. While Intel and AMD launched some new GPUs earlier, NVIDIA strategically delayed their RTX 50 series to Q1-Q3 2025. This meant they launched right into this wave of panic buying. 78% of their GPU sales during this period were upgrades, not new builds. People wanted to avoid potential tariff-driven price increases. It even drove up high-end card prices by 20%.
So they turned market uncertainty into a strategic advantage. That's quite clever, but it makes me wonder about the cost. All those upgrades, all that panic buying, what happens to the old cards? This leads us to a less glamorous but a really important ethical issue. E-waste.
You hit on a critical point, Jenny. Our research revealed a notable statistic. 68% of discarded RTX 30 series graphics cards in 2025 were still functional. Think about that for a second. We're talking about 1.2 million tons of annual e-waste from these 18-month upgrade cycles. It's a significant problem. People are upgrading often because of NVIDIA's focus on performance doubling each generation, incentivizing what's essentially planned obsolescence.
That's a tough pill to swallow. So we're essentially throwing away perfectly good, powerful hardware just to chase the next big benchmark or new feature like DLSS4. Are they doing anything to mitigate this?
Well, they do have a GPU as a service, or GAAS, initiative for enterprise clients, which recycles about 34% of those cards. But for consumer-level cards, the recovery rate is still quite low, around 12%. So there's a big gap there that needs attention. It's a real ethical crossroads. The demand for the newest and greatest, fueled by rapid innovation and clever marketing, is creating this environmental headache.
It certainly gives us pause. Now, shifting gears a bit, you mentioned NVIDIA moving beyond just gaming. Explain to me the connection between them making powerful gaming cards and leading in AI. It feels like two very different worlds, even if the underlying technology is somewhat similar.
It's actually a brilliant symbiotic relationship. Think of gaming as the financial engine. It generates billions in revenue. $32.1 billion in 2024, actually, which was 54% of their total. And a huge chunk of that money, $18.7 billion, gets poured directly into AI R&D. So your gaming GPU purchase today is funding the development of tomorrow's AI infrastructure. It's a compelling business model.
So my fancy new RTX 50 series card is basically a Trojan horse funding the AI revolution? I can already hear our listeners thinking that. That's a pretty clever strategy to transform from a gaming company into, essentially, an AI company, while keeping the gaming base happy.
Exactly. The innovations they develop for gaming, like the Tensor cores in the RTX series for real-time ray tracing and DLSS, are directly applicable to AI workloads. They even reduce data center R&D costs by about 35% because of this symbiosis. Gartner even projects that by 2028, 65% of NVIDIA's revenue will come from data center and AI, shifting from 54% gaming just recently. That's a big, noticeable pivot.
That's a big shift in just a few years. But with that kind of market power and influence, especially in AI, doesn't it raise questions about monopolies or anti-competitive practices? I imagine regulators are starting to take notice.
They certainly are. With 94% market share, it's inevitable. The EU Digital Markets Act investigation, for example, is focusing on CUDA's unfair lock-in. The FTC is also holding hearings on GPU market competition. NVIDIA counters that AMD and Intel are still out there, but let's be real, their combined share is quite small. The debate is really, is this dominance a result of genuine innovation, or is CUDA creating an artificial barrier that stifles competition? There's a 30% cloud pricing premium for NVIDIA instances because of that lock-in, which is a point of contention for regulators.
That makes sense. If your entire AI infrastructure is built on CUDA, you're pretty much stuck with NVIDIA, regardless of whether a challenger has a slightly better raw hardware offerings. So what about the actual challengers? Can anyone realistically chip away at this empire? I heard a whisper about AMD's Strix Halo, an interesting contender.
Ah, Strix Halo. This is one of the most interesting developments on the horizon. AMD's Strix Halo are integrated GPUs, meaning they're built directly onto the CPU package, and AMD is making big promises with them. They're specifically targeting the market that currently relies on discrete GPUs, which, by 2028, is expected to be 87% of desktop PCs. Strix Halo could reduce that discrete GPU attach rate down to 65%. That's a significant chunk of the market they're aiming for, Jenny.
So essentially, a powerful integrated GPU could remove the need for a separate graphics card for many users, especially in areas where budget or space is a concern. Could this be NVIDIA's Achilles heel?
Potentially, yes. If Strix Halo delivers on its promises, it could significantly change the mid-range and lower-end markets. NVIDIA is already countering this by focusing on ultra-efficient, entry-level discrete cards like the RTX 4050 for laptops. But it's an interesting dance. Intel's Arc tried to break in, and it didn't quite stick. So, the question remains, can Strix Halo succeed where Arc failed? And, perhaps even more pertinently, can it overcome the CUDA ecosystem's gravitational pull?
That's a fantastic question to end on. Because ultimately, the secret to NVIDIA's success isn't just one thing. It's this remarkable blend of technological foresight, especially with CUDA, strategic market maneuvers like timing their launches during tariff scares, and using their gaming dominance to fund their AI ambitions. But it comes with ethical questions about e-waste and regulatory scrutiny regarding their sheer dominance. It's a complex, captivating story, Mark, with a lot of moving parts.
It truly is, Jenny. Their success is a roadmap for how to create an ecosystem that becomes indispensable. But the threats are real too, and the ethical considerations are becoming more prominent. It'll be fascinating to watch how the market responds to these pressures in the coming years. But for now, they are the undeniable force in the GPU world.
Absolutely. And that's all the time we have for today on Tech Unpacked. Thank you, Mark, for another incredible dive into the nuts and bolts of what makes the tech world tick.
Always a pleasure, Jenny, and thank you all for listening. Keep those GPUs humming, responsibly, of course.
We'll catch you next time.